Oh, the shark has pretty teeth, dear. And he's
Hey, happy Friday, everybody. Welcome to the Closing Beat. Hope you're having a great day here today. This is just a quick show we do. We call it the Closing Beat. We're financial advisors here at Jazz Wealth, and we hope you keep us in mind there. We do long-term retirement accounts and things like that. Just like Fidelity and Schwab and things, but we manage our own portfolios here, and we like to teach along the way. The biggest thing for me is I like to teach clients. I like to stay engaged. We are not one of those where you can't talk to us and you can never ask questions and things. I actually love questions. So one of the ways we teach is by doing weekly classes. Last night we did a weekly class on options just to teach those customers there, and so all good with that. We will be back next week, of course, to do classes, and they can all be found in the dojo, so we'll show you where that's at here in just a moment. We're also playing a game. It's called Guess the Dow. You go to the website on the bottom right-hand corner of your screen there, and you can guess the Dow. Tell me where you think the Dow will be next week, and if you're the closest without going over, we'll send you a $100 gift card. Vinutha Hashali, I hope I said that name right, was our winner this week. They said they were a customer. I show they opened an account, but not really a customer yet. They guessed 27610.44. They were the closest without going over with the Dow. You can see where the Dow closed today. And so they elected to have the gift card sent to them. So we'll be sending out a gift card to you. Congratulations. Vinutha is our winner. You can guess where you think the Dow is going to close next week up until like lunchtime tomorrow, and then the game resets going into the week following that. So hope you'll check it out. Just a fun game, no strings attached or anything. That's what you have there. So let's get started here. You got the Dow up 6 points, the S&P up 7, the NASDAQ up 40. We just kind of held near highs all week long. If we take a look over at the S&P 500, you can see we're sitting here at highs. We broke through the all-time high just a couple weeks ago, and we've been just sort of slowly trending higher, sort of consistent volume up there. Everybody's basically happy with that. We started off the day where China said, hey, the White House said that they would be open to rolling back the tariffs. The White House then confirmed, yes, we would be interested in rolling back those tariffs. And then President Trump said, nuh-uh, I didn't say that. We have no intentions of rolling back tariffs. So keeping a little drama going into the weekend there. You also have the yield curve at its steepest at the moment, and I attempted to show that yesterday. Now I will be able to show that today. Yay! There we go. So here is the 10 to 2 year Treasury spread. We're looking back over a long period of time. The gray area in the background is all the recessions, the period of recessions there. If we zoom in here, year to date, we've seen the yield curve bounce out of inverted territory. The zero down here would be inverted territory, and everybody was like, uh-oh, yield curve inversion, that means recession. We actually did a video for our customers, which is a study that shows that's not actually what causes the recession, and so we went through everything there. If you are one of our customers, I found it for you. Go into the dojo. Here's our class that we did last night. You go into there and you find this class called Inverted Yield Curve and Economic Recessions. That's the study. You can scroll down there in the dojo, or you can sort by geeky. That was a geeky class that we did. And so there you go. You found that class there. We sort it by, we got these little fancy little things there. The little geek there, he's got a jazz geek on his shirt. Those are the more detailed classes where we kind of get into the nuts and bolts of it. This weekly versus monthly deposits, I mean, we went through all kinds of data there to show our point that we were trying to prove. But if you find you're joining us here at Jazz and you're like, hey, I don't know a whole lot, bring me up to speed. We do some basic classes here to get you up to speed. We've got a lot of them in there so you understand what's going on from personal finance to investing. And then a lot of our classes are wine and wealth, where we just get together, we talk about something there that's really not basic, not geeky, just something new trying to teach, or our portfolio updates. We do those once a month, of course, to help you out there. So yield curve inversion, the steepening of the yield curve, now the steepest that it's been in over a year as rates keep going higher, people sort of applauding that. And so, yeah, we'll see where you guys stand on that one there. If we look at the Dow, there you go. Dow sitting near highs as well, just breaking above those highs, and the NASDAQ sitting at highs as well, looking very much like the S&P 500. You also got earnings season winding down slowly but surely. In the S&P 500, you're at 420. This is going to bug me. Go over here. There we go. See? More centered. The S&P 500, 425 names have reported earnings and 74% beat rate. We've been hovering right around the 74% beat rate, which is a good earnings season. I know the bar was lowered and it didn't have to try so hard, but overall people responded to earnings season, or have responded so far for earnings season, quite positively, and so everything looking good there. As we always do, we'll go down into the individual sectors here, and we will start with healthcare. So healthcare is, so here's how this works. The heaviest, is that a word? The heaviest weighted sector in the S&P 500 is tech stocks. Tech makes up 22.5% of the S&P as of today, this very second. Makes up 22.5% of the S&P 500. Healthcare comes in second, but it's very, very closely losing its second place. Healthcare is at 13.7%. The financials, thanks to their move, and their sort of growth here in the short term, they're now at 13.3. So very, very, very close there to financials taking over second place. And we just kind of look back and we said, well, what does this look like over sort of as far back as we wanted to go? Since 1995, tech has taken the biggest chunk. It went from 9% of the S&P 500 to now 22.5%. And truthfully, if they wouldn't have done that reshuffling of the telecom sector and calling it now communication services sector, the tech stocks, that would account for 26, almost 27% of the S&P. So it gives you an idea how much tech has to play in the overall S&P 500. It's 1/4 of what the S&P 500 does. All right? Communication services, remember last September they did, was it September? Last September they did this where they took the telecom sector and they made it communication services, took some stocks out of the tech sector and put them into communication services like Alphabet and Facebook. And so it's just not quite the same. It's a different sort of sector at the moment. On the downside of that, you've got energy. Energy is now 4.5%. Used to be a really big player, actually. Energy was in the teens for a while there, but energy sort of dwindled around. So only 4.5% weighting in the S&P 500. Real estate, I'll just use an ETF for that. Real estate is now 3%. It is the second smallest weighting in the S&P, only second to materials. So you can look at like XLB if you want to use that for your ETF. So just a little update there on the overall sector weightings. If we look at some of the other areas, utilities selling off again here today. That's your biggest downside mover on the week. So I usually point that out. What was the biggest week over week mover, week over week downside mover? Utilities steal the show in that respect, down another 0.5% on the day. Consumer staples, there you go, was second, but not a very big move, just a tiny little move to the downside there. Basically, that's just people saying, keep the consumer staples. I'm going to go put some money to work elsewhere, given how strong the markets have been lately. On the upside there, you got industrials, thanks to the tariff sort of progress or excitement this week and last week. Industrials, the biggest upside mover week over week, along with materials. So you can see kind of the performance there, both sitting at highs to wrap up the week. If we look through just a few other things, you had oil up 0.5% today. It technically closed above the 200-day. Remember, every day we've been talking about that. Every single day this week we talked about oil. So oil up there. That did help some of the other ETFs that you may follow. This is the oil ETF, just a direct play. USO is the ticker symbol on that one. The oil explorers continue to come off of their lows. Notice they broke above the moving averages and now not able to get back below. That's a good sign if you're a bull in that respect there. And I'll point out tech stocks there sitting at highs as well. On the downside, yeah, there you go. You got silver continuing to sell off, that sort of safety trade out of favor at the moment. Gold mining stocks selling off there, and gold, GLD is one way to look at it. Or if you want to go to the gold futures and look at the direct pricing, 2 days, right? Just a straight sell-off, big mover to the downside. As far as commodities, gold and silver are your biggest week-over-week decliners there. What else? Mexico. Looks like Mexico a little bit lower on the day, and emerging markets a little bit lower after pretty much having a good run there. Retail finished the day down about 0.5%, but remember they had a great move up higher. I've been saying this here. Had a great move. Be normal to see them pull back. They are also pulling back. If we go over to bonds, Bonds continue to fall, meaning rates continue to move higher. We talked about that inverted yield curve and now the steepening of the yield curve there, so you got a chance to see that on the charts. Keep our customers posted on that. I'm thinking about doing like a weekly email for our customers. I know not everybody watches videos, just a quick way to update you guys on things. So yeah, it's in the works. We were kind of playing with some ideas today. So anyways, that's the overall sectors there. Let's take a look at some individual stocks. That's not going to do it. There we go. Disney, great day today. We talked about them yesterday. They reported their earnings. Of course, everything looked good. Only 39% of the time does the stock finish lower on the day. So the odds played out in the favor there, up 3.25% on the day. So Disney in general beat on earnings by 10 cents. Revenues came in as expected. Disney Plus, the news with Amazon, the CEO made the announcement there. They got deals with Amazon. They got deals with Apple. Hulu's starting to play out well for them. They got that from Fox. And so looking good for Disney, which is good. I know a lot of you had that Disney. You were looking for it to wake up. So looking good there. We happen to own the stock, so we're happy with that as well. 52% increase in revenue in their studios, thanks to some of their box office successes there. And 8% higher in parks and revenue. So revenue continuing to kill it there. You usually don't see large swings in that parks and revenue area. So 8% is a win for them. And Disney had a good day. Let's go with Take-Two Interactive there. They missed on earnings by 64 cents. Guidance was not very clear, sort of a mixed guidance message if you like to read through their reports there. So you got the stock at least started the day higher, and by the end of the day it was flat. It was as if nothing happened. So pretty volatile day for Take-Two. The NBA games, Grand Theft Auto, and Red Dead Redemption, all to sort of thank for the bright spots of their earnings that came out there. But they did, in fact... Well, we have to say they lowered guidance. That's the only way to say it. It was sort of mixed guidance, tried to muddy the waters a little bit. At the end of the day, they lowered guidance there. You may also know ATVI, if you know Take-Two. Activision Blizzard there. They reported earnings, beat on earnings by 20 cents. Revenues came in better than expected. They lowered their guidance as well. World of Warcraft was one of the bright spots in the gaming category there. They had some positive things to say about subscriptions overall, but today investors basically just not having it, down about 0.5%. So that's that one. You got Dropbox in the news. Pretty volatile day for Dropbox, actually. Down 5.5%. Dropbox beats on earnings by 2 cents. Revenues better than expected. Raises guidance, and they said, you know, the desktop app is doing well. A lot of people were like, what do you mean? Like desktop app? So does that mean you had more people? Did more people pay? We don't get it. So it was a little unclear there. Not the best, in my opinion, not the best report that they could have given there in terms of forecasts and guidance. So that stock a little bit lower, about 5.5% down on the day. The HP and Xerox news. HPQ was up just a touch today. It's been selling off because HP said, we're not convinced that selling the PC and printer business to Xerox is really the right move. We have had discussions, but we have no official path forward at the moment, is what they were saying. So a lot of people think of that as sort of negotiating. It's just a way to put something out there in the headlines that gets people to negotiate behind the scenes. Xerox still higher on the day by 4%. So not bad there. Duke Energy, if you're looking in the utility space there, that's a waterfall drop, right? You're looking for waterfall drops. That's the equivalent. Notice where it stopped today. If you draw a line right here at this trend line, I won't draw it, but if you draw a line right there, you stopped right at the uptrend line. So a lot of people looking at that as a possible buy area, at least a little bit on the day. Duke beat on earnings by 12 cents. Revenues came in a little bit weak. Guidance was basically as expected, so nothing too exciting there. We'll cover Monster Beverage. There you go. One of the bigger movers today, 2.6% gain on the day. Monster beat on earnings by a penny. Revenues were better than expected. They're doing a $500 million share buyback. That grabs some attention there as well. And lastly, we'll do maybe Stamps.com. This one got beaten up. All this mess from back here was when they lost their deal with the U.S. Post Office. They're working it out, right? Up 12% on the day. They beat on earnings by 40%. Stronger revenues, guidance basically as expected. So they're coming up out of that little move there. I'll point out GE, by the way, one of the better performers here just over the last couple weeks. Really strong move there. I know a lot of you have been sort of bottom picking on General Electric. I haven't seen any hooting and hollering there, but looking good for GE. If we look through the Stocks, 65.1% of the S&P is above the 50-day moving average, meaning 65.1% of all the stocks in the S&P 500 above the blue line on my charts, which is the 50-day. We basically held tight there almost all week. 65.7 was yesterday, so not much of a change in general. You had 26 new 52-week highs today, and the action was in the tech space. So if we go over here, more of the excitement was in the tech space. Microsoft, 1.18% up on the day. Very strong, steady kind of moving stock there. All looking good for them. QCOM on the backs of the earnings, just another great day for them, up 4.5%, getting maybe a little extended in the short term. Speaking of extended, Qorvo, still up on the day, remaining up at these highs. 104.04 up at highs, or where it closed for the day. Really strong there. Point out Seagate Technologies there, hitting new highs. Strong, consistent, uptrending stock there in the tech space. And Skyworks, there we go. Also looking good there. Strength after the earnings and, of course, the Apple news and Apple's earnings as well. It's just kind of been the benefit of that. So in the tech space, that was sort of the dominant area of your 52-week highs today. You also had some drug companies. Amgen hitting new highs as well, starting to run away just a little bit. And Celgene. Celgene. There you go. Consistent uptrending stock there. I pointed out GE already. That hit 52-week highs as well. On the downside, you got the same names, FANG and Occidental Petroleum. New lows, although just a touch, right? Occidental Petroleum touched lows and recovered up off the lows there. Bottom pickers, probably what you have there. And Fossil, people that make the watches and other things. Stock moved to 52-week lows after yesterday's punch in the face. We've got some stats plays here. FTNT did continue higher. This is day number 3. It has 2 more days to pull back, which doesn't look like it's going to do that. We should run the stats and see what happens when it's now this extended. But why? So stock moving higher there, 2.1% on the day. And I believe CVS was higher on the day as well. A lot of these stocks in this space were higher. Naturally, we're happy. We own the stock. We don't mind it moving higher. But if you're looking for the stats play statistically, or if you're following along, you're one of our customers, you know that thing's supposed to pull back right about to this line. It now has, it now has 3 more days to go as well. So let me make that note just so we can keep up there. Do it the old school way. Yeah, so that's all I have for that one. You hear a lot about the trade news out there, and everything's going well, but you don't hear a lot about Chinese markets. There's actually a couple ETFs that you can look at. FXI is a way to trade the Chinese large cap stocks. They've done well. They've sort of been recovering off of those lows as this positive trade sentiment has stayed positive, right? So that's that one. And then Asher, also a popular one there. These are the A shares of the Chinese markets as well. Maybe trying to break out of sort of a sloppy little, you call it a wedge? I forget what you call that there. Series of higher lows but equal highs. So getting stronger, right? The Chinese stock market getting stronger there as well. Over the weekend, you've got a Fed member actually speaking overseas. Sweden is where they are speaking. So the Fed is not giving up their mission to get out there. And in other news, you have Michael Bloomberg considering running for president as a Democrat. It's not that he said this officially. He just filed to be a part of the Alabama primary because that deadline's coming up. So a lot of people are thinking, all right, he's keeping his options open. He hasn't officially said anything. We'll see what happens because, they need more Democrats to run for president. There's not enough of them. Other than that, that's basically what I have for you on the day here today. Just make sure I covered it. Yeah, I pretty much covered it. I'll take your questions if you happen to have any, and we'll let you get off and enjoy your weekend. Yeah. Enjoy the show and you watch every day. Thanks, Mr. Eat More Beans, or Mrs. Eat More Beans. Yep, another week closer to retirement. That's a positive way to look at it. Yeah. What do you think of Energy Transfer, ticker symbol ET, one of the weaker stocks in this area? You're signing up for a limited partnership here, so keep that in mind. Might want to consider the type of account you include this in. But it seems like it's trying to come off lows. I would not be the one to want to guess the bottom on this stock. I'd rather watch the momentum change and see if I could hop in somewhere along the way. It's just where I'm at. Yep. You think these stocks are all about to drop about 40% in the near future? I know there's a lot of people waiting for a pullback. Yep. I love it. I love it. Hey, Dustin, could you explain why Amazon is so weak there? I wouldn't say that's weak. It's just not participating. Not really a lot of action there, not a whole lot of excitement in general. They got the big holiday season coming up, and it's kind of like having a stock that's about to report earnings. If you're going to pay up for a stock like that, you'd like to know that there's a chance of some growth in there. Could just be the lack of news over there. I thought about doing a class on technical analysis just to cover the basic patterns and things like that. Yeah, you could. That's fun to talk about. Yeah. Yeah. Is Disney overpriced for now? That's up for you to decide. I mean, it had a good move today. It did start pulling back. If you missed it and you're trying to get in on it, I wouldn't blame you for saying, well, let me wait a couple days, let everybody settle down. You got the Disney Plus coming out next Monday, coming out on Monday, actually. So that could create a little excitement in the short term, at least a little volatility. Yeah. Yep. You're very welcome, Steve. How do you become a financial advisor like you? To technically become a financial advisor is not very difficult. It's like taking a test. That's the sad part. But you got to make sure it's something you want to do, because it's you guys see the sort of hanging out, talking with you, and teaching you stuff, but there's a lot of work to it. So what do you think about that Roku there? Yeah, we talked about it yesterday, the sell-off on earnings and everything. Today it didn't do a whole lot, a little bit of a recovery there. I don't know that that gives you any clarity to say now hop in or now like get out if you're in it or something. I think it's just kind of in no man's land for a while, and that happens a lot around earnings. Stocks kind of, it's like a bomb going off in a pool or something. It's a little bit wavy for a while, and you kind of got to let it settle down. Yep. You're liking these options, didn't do what I was supposed to do, but it's still oh, cool. You decided to play it that way? Not bad. Yeah, I took a look at Travelers today just to see. It's almost back to where it's supposed to be. It just took a lot longer than expected. Slow mover, real slow mover on that one. If you were overly optimistic, what would you guess the S&P by year's end? If I was overly optimistic, that's an interesting way to say it. You don't actually have to. Let's see if I can do this quickly for you. I don't like to guess where things are going to land. Is it going to come up? I'll give it a second. You can actually look at the options market and see what everybody else is thinking. You just go out to the last expiration. It's not going to pop up for me. You go out to the last expiration, you can actually see what range everybody thinks the market's going to close in between. That's one way to look at it. But, I mean, it kind of feels like right here's good, 3,100, if I had to guess. Yep. How long was the longest bear market? You know, we've actually done that class for customers, gone through every single one of them, broke it down by number of days, and then number of days for the rally, the decline and everything to see how long. So number of days, I can't remember the number of days or what it was, but that was a lot of fun. I remember doing that class there. Yep. Do some education on bonds. There's a lot to cover there. In particular, what would you be thinking about there? Done some classes on 2s and 10s, the yield curve, the 3-month to the 10-year, things that people like to look at there that become sort of a hot button topic, but maybe not much else other than that. Have you heard about the Amazon Disney deal? Yeah, mentioned it just a minute ago. Yeah. Nikkei show that sometimes markets don't recover 100% of the time, or they recover all the time. So a couple different markets around the world have different personalities, and I would treat that differently. It's probably the best I can say there. Yeah. Oops, sorry. Is January 1st the first day for Roth 2020 contract? It's actually January 2nd. I think January 2nd is the first day a bank day where you can get the money in. Is it? I don't know why I know that. No, January 1st is a Wednesday. Yep. There you go. That would be your first day to start for 2020. Whether you're on our platform or something else, that's the first day you'll get that choice. And from January to tax day, you'll actually have the choice to choose 2019 or 2020. I make a bigger deal out of it as we get there. If you open a Roth in January, can I do a catch-up contribution for 2019 and still do 2020? Provided you had income, you could start a Roth IRA at any point. Really, you don't have to wait until 2020. You have to wait to contribute for the next year, but you could start on 2019 now. Yeah. Think we'll get any upwards movement from Cisco after the... Cisco's a tough one. We'll go over the stats on that one to try to help you, but for the sake of a lot of people and a lot of funds that have this in there, yeah, I hope so. I would hope so there. Any input on Gap? Unfortunately, they lost their CEO. Yeah. They lost their CEO. They got an interim CEO in the meantime. The problem is Gap, right? Old Navy does well for the brand. Banana Republic does well for the brand. Gap is the tough spot. It's like the holdback is on Gap, and that's why they're spinning off Old Navy next year, early next year, to try to solve part of that problem. So next year, Old Navy will be its own company, its own publicly traded thing. The Gap will be off to the side. I worry about that, but we'll see what happens. Yeah. Nice. Well, I think I have answered your questions there. I will look for maybe one or two more before we wrap it up, but I hope you have a great weekend there. No worries. Yeah, that's it. So we'll see you next week. Enjoy the rest of your weekend. I appreciate all of you guys watching here. Anything you can do to help support us by maybe hitting the subscribe button would be great. And you enjoy. Thanks for being around, and we'll see you next week.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.